Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. What's going on in the real estate market? I think everyone is wondering as the Bank of Canada increases interest rates and the banks increase their prime rates and mortgage rates go up. And so I wanted to connect in with Akbar Zareb, who is with Kingsway Realty, Kingsway Real Estate, a very renowned owner and operator of a very strong real estate brokerage firm here in the GTA, about what's going on. Akbar, welcome to the show. How are you, sir?
I'm doing very well. Thank you, Brian, for the invitation. This is the second time that I'm appearing on your show, and it's always a pleasure.
And I understand you've got your own show now on AM 640.
Yes, we have our own radio show basically at 6:40 a.m. on Saturdays between 12 and 1. Every Saturday is basically talking about real estate and so on. It's always a pleasure to, be with you and, talk about real estate. So this is what we do.
Excellent. So, bottom line, what do you think? Is the market set for a crash, or is it going to continue flat, or is it going to go up like it has been for the last 2 years?
Not too sure about the crash, Brian, because it's there's, as you know, I've been around for 32 years. I've been doing real estate, selling real estate. In 32 years, I've been in 2 recessions with this real estate business. And, when I compare what's going on now and what happened in, the 2 recessions that I've been through with this real estate, there's a huge differences. Number one, to begin with, people start panicking with 50-point rate increasing in the mortgage rate, and they think that, oh my God, it's a crash. I'm sure you recall in 89, 90, the mortgage rate was 14%, 15%. You remember that, right? So
I sure do.
That was such a, a huge impact on the real estate market that finally put us in a very bad position where the recession came and there was a crash in real estate. So builders, they were leaving condo towers halfway finished and running away. People, they were walking away from their deposit checks. I remember those days. People, they would put a down payment or deposit on a house. They wouldn't close. It was a disaster. 50-point interest rate hike, or for that matter, is almost like 1 point now since April or March. So it doesn't really impact the real estate market that much, really. If you put it in numbers, it's very, very has a really I would say almost no impact on the. I think what it is, Brian, is that more is a psychological aspect to this interest rate, where the behavior of the buyers change. They're sitting on the fence and watching the market, to see where the prices are going. Is it going to hit the bottom as far as the prices goes and so on? Not too much about the interest rate. So
okay, so let me challenge you.
Far from crash, put it that way.
So let me challenge you on that for a second. So, it's been more than 50 basis points so far. 50 basis points was just last week. Most people think that Bank of Canada is going to do it another 50 basis points the first week of July when they meet next. They've been very clear about their forward outlook that they're going to continue increasing interest rates until and unless inflation comes down. And right now, inflation's above 6 points. This is the biggest separation between inflation and interest rates that has been around for like 50 years. And right now, given supply chain challenges, given the war in the Russian invasion in Ukraine, given gas prices, given food prices, et cetera, inflation is here. And the question is inflation here to stay, or is it transitory? And now, the Secretary of the Treasury in the United States, Janet Yellen, came out and said she had it wrong. She called inflation transitory a couple months ago, and she says clearly it wasn't transitory. I got it wrong. Bank Canada, the Fed in the United States, Bank of England have all increased interest rates because they've all said that they got inflation wrong, that they thought it was transitory and it's not, and therefore they're taking action. And then the World Bank came out today and said that they worry that there's going to be stagflation, that's going to be like the 1970s with 2 shocks to the system. So with successive rate increases, so not just 50 basis points, but probably by the end of it, who knows, call it, 200 basis points or maybe even more if that's what's going to take to get inflation down. And construction price increases that have gone up such that there's not going to be as much supply, fights to inflation, worries about recession, worries about stagflation. You still not worried?
Well, one thing that I have to, I agree with you 100% that it's not only Canada. What we are facing is global. So this time is different, probably situation than before, where we're facing, the market crash and so on. The inflation is global right now. Do I agree, or am I offline right now? So it's global, it's everywhere. So therefore, it's not just impacting Canadians or in Canada. I would say that strongly, I would say that past 4 or 5 years, real estate sector, maybe the only sector that it kept the economy going. And with what's happening with real estate, I think real estate still is safe, in my opinion. Giving into account that there are, over 420,000 immigrants coming to Canada. These are, as I mentioned in the last interview that we had together, we had a conversation, that these are not, broke refugees. These are people that they have money, they're coming here with tons of money and they are investing in Canada. So the income, it's rising, the salaries, job, there's a high job vacancy. Housing demand is going to be there based on those factors that we just talked about it. So I don't know if it's going to be crashed. Definitely a slowdown, but crash, real estate market crashing, I don't really see it. Not now, not in near future. Strongly, I would say that I don't see that happening.
Okay, well, that's a far more positive outlook and expectation that I was expecting to get. We're going to take a break for some messages and come back more with Akbar Zareb of Kingsway Realty in just 2 minutes. Stay with us, everybody.
Thank you.
Welcome back, everybody, to the Brian Crombie Radio Hour on Saga 960. We're chatting tonight about real estate and the real estate market with Akbar Zareb of Kingsway Realty. Real estate. He's an owner and operator and broker of a fairly large real estate company, his own real estate company here in the Greater Toronto area. And he's been very active in the real estate business for a couple of decades. And so he is a good guy to chat with about what's going on. Akbar, I want to challenge you a little bit, just for the fun of it, to see what you got to say. I want to share with you some statistics, and for people that are listening, I'll try to describe it. For people that are watching, I'm going to show it to you. What this is a graph that compares the real disposable income in the United States versus housing prices, and then also does the same thing for Canada. And it's between 1980 and 2020. And as you can see, which makes logical sense, is that as disposable income goes up, housing prices go up, because as people have more money, they can afford to pay more for home prices, and therefore housing goes up. And effectively, it's also an indication of both real and nominal increases in disposable income, because that's sort of the inflation and housing prices that you go up. And you can see in 2008, 2009 in the United States, as we well know, there was this subprime crash in the United States, and the United States market dipped fairly dramatically. What this shows is down by 25% between a high on this index of 200 going to 150, but that it's recovered all of that again. So the United States is, from a housing price standpoint, back up to where it was prior to the crash. And so everything that was lost has been recovered. Compare that to Canada, and you can see that in 2000, you had a acceleration of housing prices in Canada such that it separated it out from disposable income, comparable to what had happened in the United States. But then there was no crash in 2008, 2009. It just continued up, such that today, where there's, a slight difference between housing prices and disposable income being greater than housing prices on average in the United States, in Canada, housing prices are almost twice what disposable income is. This huge disparity, which means that it's far less affordable to live in a typical average house in Canada. As we all know, we've seen all the press and heard all the political comments and things like that, that we just don't have this affordability ability that they have in the United States. So prices are on average twice as much in Canada as they are in the United States relative to disposable income. But also it would suggest that, frankly, it should come down. What do you think of that?
Well, definitely the price of housing prices has increased almost double. If you look at the chart, I'm looking at your chart, definitely it looks like almost. And the only difference that I can see here between the United States and here, as you mentioned, the price of properties, it's much more affordable and way less. Actually, I was looking at some properties in Texas, for that matter, 2,200 square feet, beautiful home, double-car garage in Texas. It's selling for $400,000, actually $398,000 US. Same house here in Mississauga or anywhere in Ontario, looking at about close to $1.7 million.
Yeah.
So there's a huge gap. Definitely, you're absolutely right. When you're looking at this chart, it's scary. Actually, it concerns me, to be frank with you. So it does. You're right.
So what's the implication of that? That we're going to put up with less affordable homes? There's nothing that's going to change it?
Well, this is to blame the government again, back to the government. So with the new changes that they made, I don't know if I wanted to just spell it out here or not, but come up with all these beautiful changes. At the end of the day, it does not, Brian, help our housing crisis. What they made changes in the recent changes with the housing, and they came out with this, fantastic, plan. All they do basically pay into more taxpayers' pocket than anything else.
Yeah.
For example, to slow down the pre-construction, they came out with the HST, double HST. What it means is that if Brian owns a pre-construction and sells it, usually there's one HST, which is 13% that you paid up in the upfront, and now it's double HST. Basically, buyer pays and the seller pays. How's that helping our housing crisis? I still wondering how. It doesn't. So coming back to the same as a capital gain tax, prior to May 7, capital gain tax was pretty much 50% of your net gain on selling a property would be taxable income to you. And CRA basically would calculate that 50% of the profit as a taxable income. Now, after May 7, it's 100%. And these are the changes that they made, and they think this is gonna, solve the housing crisis.
And you don't think it'll have any impact, or you think what it'll impact such that people sell less often?
The only impact that really the changes that they made is that banning the foreign buyers for 2 years, where they were, foreign buyer, they buy more investment properties, especially pre-construction. I can see slowdown in pre-construction, definitely more than resale. So as you know, I'm very active with the pre-construction project throughout Ontario.
So answer me this if you could. If you slow down pre-construction, how does that help? Because there's a lot of people that may not be buyers of pre-construction, but they're renters of people that are the buyers in pre-construction. And a lot of those foreign investors may have come in and bought those condos, but then they were turning around and renting them out. They weren't necessarily holding them vacant, were they? I think they were renting them out, or they were buying them and flipping them. And when you think about a typical developer, they need to sell 75-85% of their units before they can get the financing to build the thing. And so therefore, if there's less foreign buyers and it's more difficult to get to that 75-85% sold, they're not going to get the financing. They're not going to be building as quickly or as often. So I almost wonder whether the restriction on foreign buyers is counterproductive rather than productive.
I agree with you 100%, because that doesn't help the first-time buyer out there that they are making $50,000-$60,000 with the price of its price craziness. How are you going to get into the market now? How's that impacting? How's that helping the first-time buyers? It has not at all.
Yeah.
So, and unfortunately, as I said, the government's rulings and bringing those new rules and so on, I don't think it's helping the average home buyers and sellers in this market. It's not. The only thing that I can say as a good news is that right now we have more inventory, more properties coming on the market, and there is, because of result of that, the buyers, they have the opportunity to negotiate the price. We don't see 40, 50 offers on a single property anymore. And a lot of agents, they have smartened up and they don't put the offer date on the listing. When they get a listing, they just put it open. So maybe one or two offer coming on the property. So there's no multiple offers and craziness of going $400,000 over asking price. Not happening due to more inventory is coming on the market. I have some numbers here that maybe after break we can share with our audience what's happening pretty much in May 2021 compared to 2020, 2022 with 2021, almost 38% sales dropped. I'm not talking about the price, number of the sales.
This is in what, in Toronto?
In GTA, yeah.
GTA. So what percentage?
38%.
38% drop in sales, not in
Almost
price,
39%.
but in the volume of sales.
38.9% in May 2022 compared to May 2021, number of sales dropped in GTA.
Okay, what about price? What's happened to price?
Price still is strongly going, so it didn't make a much impact. Actually, a little bit went up, like 9% through GTA, from average price of 1.2 to 9% higher. But then again, this is still it's sliding actually when you're comparing to. That was in April, and then you're looking at May 2021. It's got about 20% drop. I'm comparing month to month. So due to again more inventory, there's negotiating opportunity for the buyers. They are negotiating the prices. So it's there's a lot of listing, over 3,000 listing in last I would say since April. People they had it on the market, they canceled it and they put on the market with a new price.
So if there's 3,000 listings now, what would there have been, a couple of months ago? Would there have been a lot less or a lot more or what?
Less, yes. Yeah.
Less.
As we go along, more listing coming on the market, increase of I think it was 23% increase went up.
23% increase in listings.
The listing number of listings.
Okay, so basic, economics 101 would tell you that if the supply has gone up by 23%, so listings have gone up by that amount, then you should have a corresponding drop in price, but price hasn't gone down.
Price has not gone down yet. No.
And so what has happened is
it was 26%, not 23%. I'm just reading my notes here. So about 26% year to year over the year comparing to last year. This time, 26% the listings it's gone up more listing on the market. And we see that.
And so there's more supply and if the volume of sales has gone down so precipitously, does that mean the demand is down?
No, the demand is there too, but see, this is the thing with the real estate. So unpredictable from month to month. We cannot put our finger on what are the trend and why this is what it is. So the economy 101 economy, it says more supply, less demand. Of course, the price comes down, right? Right now we have more supply coming on, the demand's still there and the price still increasing. I think that you'll be surprised by June and July. Again, taking into account that May and June, they are the busiest month for real estate at any given year, no matter what. So when
you were saying that sales were down 30%. So how can sales be down 30% in the busiest month?
Number of the sales, number of
sales.
transactions.
Yeah,
number of transactions.
So, some people could surmise that what's happening is people haven't, the sellers haven't lowered their price yet.
Right.
And buyers are less plentiful and less eager than they were in the past. And so therefore, are houses staying on the market longer?
They are staying on the market longer. Yes, definitely.
And so, I think, so naturally before you're going to reduce your price, you're going to leave it on the market longer, hope that someone meets your price. But then after a while, if you have to sell, you're going to ultimately lower the price and someone's going to buy it. You know, I have been inundated would be the wrong description, but I have been sent in the last little while numerous different emails from people like yourself saying price reduction, new price, better price. And for the last 3, 4, 5 years, I've never gotten such an email. It was always, you better get in now because it's going to be multiple offers and you better overbid. And so this advertising by brokers or agents that there's a better price or a lower price or a new price is unheard of in the last couple of years, is it not?
Definitely, I agree. You know, you're going to be surprised when it comes to August and September. I think that's where we're going to see more balanced market, in my opinion, because right now with May, June, this is just statistically yearly, every single year, it's a hot market. So therefore, you see still the price. When I'm saying 9.4% growth still in the price, is just due to the traditionally, this is what happens with the market in May and June.
Yeah.
So July is going to be sliding a little bit lower, in my opinion. You're going to see perhaps around August and September, you're going to see more balanced market. That's just my personal opinion. I've been doing this for 32 years. Again, our real estate market is impacted by internal, of course, and external. I'm talking about globally, as you were sharing with the some inflation numbers and so on. It could be impacting our real estate market.
Yeah, let me just share some of these numbers with you, if I could. And again, I'll try to describe this for people that are just listening. Take a look at this. This is CPI Globe and Mail between 1975 and today. And between 1975 and 1987, we had inflation, 12% coming down to 2%. From 1987 to today, we've been between 1% and 4% of inflation. And then, as you can see, in the last couple of months, inflation has skyrocketed up to 6%. And I'll show you another chart. This is 12-month change in goods, services, and construction. And you can take a look, flat from 2011, depreciation during the financial crisis, to, somewhere mid-2021. And then massive acceleration where goods and services and construction are, above 10% inflation at the end of 2022. And then you take a look at this, which we all know about, shipping cost increases. 500% increase in shipping cost increases. Now, this is caused by the Russian invasion of Ukraine. This is caused by COVID-19, measures in Shanghai and all of the ships that we know that were there. And so therefore, this might be transitory and it might come down, but 500%.
That's a lot.
That's a lot.
That's unheard of. Yes.
With that kind of inflation, how are you going to get it out of the market? How are you going to, if inflation is there, the only way to get it out of there is by triggering a recession, is it not? That's what, sort of the Bank of Canada, the Fed, the Bank of England do, is they jack up interest rates to slow the economy down. And we know unemployment is at all-time low. The market's on fire. And because of that, inflation is at a 25-year high. 25-year high. And if the Bank of Canada needs to get it out of the market, needs to get inflation expectations out, they got to trigger, if not a recession, they got to trigger a depreciation in everything. And isn't housing one of those things they got to have the depreciation in?
Definitely. With the interest rate, I'm expecting by the end of the year. I know a lot of people, they don't want to talk about it, but expect to rise. In the beginning, they said only 1 point, 50 points are going to be basis point going to go up. Then after they did that, they said another 50 points, which we saw it now. And my prediction is that you're going to see another, probably another 100 points, maybe 150 points by end of the year.
Yeah, that's my bet. We're going to take a break for some messages. We'll be back in 2 minutes with Akbar Zareb of Kingsway Real Estate, talking about the real estate business. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. It's really kind of fun chatting with and arguing / discussing with Kingsway real estate owner, broker, real estate man around town, Akbar Zareb, who has been in the real estate business in the Greater Toronto Area for a couple of decades. Knows it well, so much so that he opened up his own brokerage and recruited a whole bunch of different real estate people to come work for him, and he covers the GTA well. Akbar, I wonder if we could talk about different segments of the real estate business for a second, if we could. If you think about there potentially being risk, so I think there's more risk than you think there is, but I think you accept that there is some risk for where pricing is going to go. Some people would say that condominiums downtown are the lowest risk because gas prices are high and condos are very affordable, and so therefore people will always need someplace to live, and so therefore the cheapest form of housing is the one that has the less risk. And at the other end, high-end real estate, luxury real estate, is the most susceptible, or frankly some people would say second homes. Cottages are the ones that are most volatile because in bad times you sell your second home before you sell your first home. And then luxury homes are the ones that slow down the most and end up being negatively impacted. And then when you think about sort of that middle, single family homes that are in that $1 million to $2 million range, or $750 to $2 million range, versus townhomes that might be townhomes or duplexes or smaller homes that might be in the less than $1 million or to $1.2 million. So if you sort of segmented it between condos, townhomes, reasonably priced single family homes, and luxury homes, where do you think the volatility is the greatest, and where's the volatility, if it comes, the most limited?
Again, I'm gonna, like a broken record, I'm gonna say this. So I've been through 2 recessions, so pretty much experienced it firsthand. Being in the real estate, working in Kingsway area, my first recession right in Etobicoke, and seeing those big houses, mansions and what have you. So if there is any changes, any slide, I would say that you're absolutely right. The cottage homes, it's going to be like a second home. It's going to be a factor first, and definitely high-end homes. So we are kind of seeing signs of it, Brian, right now. So we're seeing, like, I was looking at a house over $8 million in Mississauga, been sitting on the market and absolutely no showing. There was another house for 7.2 or something like that. So I contacted the listing agent. I said, what's the activity there? Almost 40 days on the market. They had only one single showing. So that's the signs that you were talking about, the scary statistic that you were showing. Right. So because just affordability, and also the market is not there. Condominiums are becoming more lifestyle than anything else. It's it's very carefree type of lifestyle, and you'd be surprised. A lot of condos that we are selling. I just sold another one in Woodbridge. The unit didn't even have a parking spot. It's built right on highway, and that's what people want. Affordability is a factor. Nobody wants to, get involved with the landscaping and all kind of things. So I think the safest, in my opinion, is the condominiums, and that's why the builders, they're putting all their money into the condos and building those skyrocket, skyscraper, like with 80 floor, 90 floor units in Mississauga. Never ever you heard of it. So and that's becoming a lifestyle, and I think it's the safest.
Okay, let's turn to geography. So, in the last couple of years, particularly because of COVID, people were working from home. We had this massive appreciation in the 519, 705, et cetera. People were moving to Hamilton. They were moving to Brantford. They were moving to Cambridge, Georgetown. Some people moving to Collingwood and working from Collingwood. And so, we saw these numbers, about 75% increase in housing prices in Brantford or Georgetown and things like this. With people returning to work, with higher gas prices, do you think that big sort of almost exurb, it's not even suburb, it's really sort of outside of the suburbs, Are they more at risk than sort of the 905, the Mississauga and Bramptons? Or is Mississauga and Brampton at risk because people are going to be, frankly, in the city of Toronto? Tell me what you think about price increases or price decreases. City of Toronto, 905, outside of the 905.
Well, let's go back a little bit. So if 4 years ago, I would say, Brian, let's go look at some houses in Hamilton. We say, Steel City, Hamilton? I don't want to live in Hamilton, right? And you could get a, average 2,000 square feet home, square feet double car garage for around $400,000. That was the price in Hamilton. So to surprise our audience, that Hamilton being the largest in respect to the price increase compared to anywhere else in Ontario. Because of the highways near, it's not too far, it's 30-minute, 40-minute drive. Secondly, the impact of the COVID, it's made people that don't necessarily need to live in Mississauga or downtown Toronto anymore, or they moved out, in 905, just like Hamilton, even St. Catherine, Niagara Falls. So, and on the other side, Oshawa, Green, all the markets in 905 picked up. So the price increases percentage-wise, Hamilton had the highest increase in terms of the price increase in the last 2 years. As far as what's going to happen in respect to if there's a recession, where it's going to head, and who's going to be impacted more, the 905 or a 416 area, or even GTA like Mississauga area. Well, definitely the price plays a big role into the recession, of course, where people, they cannot afford to buy a $2 million or $3 million house in Oakville anymore. So those houses are the first one that's going to affect and going to sit on the market and sell it for less percentage than the house in Hamilton.
Right.
Definitely.
Okay. If you're worried about the market, what do you do? What would your advice be if someone was a little bit concerned about what was going to happen in the market? Would they sell quick, buy quick, sit on the fence, rent rather than buy? What's your advice for people that are a little bit concerned?
Well, depending on their lifestyle and depending on their financial situation, we have people that they buy homes for cash. They have no worry at all.
Yep.
I'm worried about the people that are they just want to keep up with Joneses, and they just buying it out of just necessary need. I would suggest that don't do that. Right now, we are in a situation where it's very unpredictable as where the market going to go. And I'm very honest and candid with you and with our listeners that we don't know where the market's going to go. Yep. Look at your affordability. Make sure that it's in your budget, that what you're buying, if the market changes, think about 4 years, 5 years from now. When it comes to renewal of your mortgage, the rate that you have right now, it may not be there. So some people, they got mortgages at 3.8%, 3.5%, a year ago, and 5 years from now, that mortgage comes for renewal, and the rate, God knows what's going to be, 7%, 6%, 8%. It's almost going to be double than what you're paying right now. Take those into consideration and make sure you're comfortable with the numbers that, it's going to be in the past.
So one of the things that I think a lot of people have done based on the statistics that I've seen is gone into variable interest rate mortgages in the last couple of years. There haven't been as many people in fixed rate. And as interest rates start going up, I guess I would think that would be a risk. What's your advice to your clients today? Is it to stay variable interest rate, or is it no, lock it in and go for the fixed rate mortgage?
I would say still stay variable.
Really? Why?
Yeah. I know it's going to go up, but, take advantage of what you have right now.
So take the advantage of the lower variable interest rate,
yeah,
rather than insure yourself against raising prices, raising interest rates by going fixed.
Yes.
That's interesting. I would have thought you would have advised the opposite. That's kind of interesting. Okay.
So fixed? No,
yeah.
Definitely. No, I'm sorry. I misunderstood your question. So if you have variable, so lock it now, because we know the interest rate going up.
Oh, so you are telling people go fixed, go long term.
I'm sorry. Yeah. Yes.
Okay. Okay.
I
That's good.
thought you were saying like before variable was the way to go. But right now you got to lock it in because we all know. You just shared some charts with us that as I said, it's scary when you look at it. Definitely, Bank of Canada are not going to sit hot and not do anything. The only way that they can control it or not even control it is by increasing the interest rate.
Right. Okay.
Definitely.
So, bottom line, if I needed to do something today with a house, should I buy or should I sell?
It's depend on your wallet, your income, your affordability. Can you afford your need? So many factors when we talk to the buyers or sellers. First question: what's your plan and why are you doing what you want to do? It depends on that. There are people that's sitting on $1 million, $2 million house, empty nested. That's just an old couple. They living there. Honestly, if they were my uncle or aunt or something, I would say sell it, cash out. The market is good still. You can get a good price for it and buy a smaller property. So downsize. You're not going to lose for sure if you do that. But if you're comfortable where you're at, don't sell it.
What about second homes? Do you do any work in cottage country?
Of course, yeah, we do a lot of those too. So, but I want to get back to your question just when you mentioned what should they do. Now, we never talked about rental market in our show. So in the discussion that we had, the rental market is crazy. It's going up, increasing. It's not coming down. For sure, it's not coming down. So if you look at Mississauga right now, 4 years ago, 5 years ago, you could rent a 1-bedroom and a den in a condo close to Score One for $1,700. Today, the same unit is going for $2,300, $2,400 rent per month.
Really?
So yes. So a basement apartment in Mississauga, you're lucky if you find a 1-bedroom basement apartment for $1,700.
Yeah.
So taking all that in consideration, if you are a buyer out there and you want to do something, I think the timing is now to do something about it. If you are renting, you're paying $3,000, $4,000 rent. It's your mortgage. Get into the market now, buy it now. It's coming to a balanced market as we talked about it earlier, and just something. The interest rate still is attractive. It still is affordable. So get into market now. Buy the ride. I'm waiting.
Akbar Zareb, Kingsway Real Estate. Thank you so much for joining us and giving us your opinion on the real estate market. Really appreciate it.
Appreciate it. Thank you, Brian. Always a pleasure.
We're going to take a final break and come back with some concluding comments in just a minute. Stay with us, everybody.